Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, China has suddenly reversed course on reining in local authority debt, now seeming to encourage its growth. But first, the US trade deficit rose to a 5-month high in July, with the politically sensitive gap with China hitting a record monthly high of $34 billion. The annual goods deficit is now $841 billion, or 4.2% of GDP, while the annual services surplus is $267 billion, or 1.3% of GDP. The annual goods deficit with China is $391 billion, almost half their total goods deficit. Whatever the Americans are doing to cut it back, it isn't working. US exports shrank as Chinese retaliation cut soybean exports sharply. And the irony is, it is American consumers who are driving the demand for Chinese-made products, despite new US tariffs. And the Bank of Canada held its official interest rate unchanged at 1.5%, although analysts now expect it to hike at the October review. They seem to be holding off to get the NAFTA situation behind them. The other NAFTA partner, Mexico, has previously made a deal with the US that may be behind a rise in consumer confidence in Mexico. In Europe, the British and German governments have abandoned key Brexit demands, potentially easing the path for the UK to strike a deal with the EU, according to a Bloomberg report. Meanwhile, data on EU retail sales for July was increasingly weak, rising just 1.1% year-on-year and below even depressed analyst expectations, dragged out by Germany and Spain. And there was a surprise slip in the Chinese services PMI for August. Markets are expecting an index of 52.6, a similar expansion to July, but it came in at 51.5 and a noticeable slowing. An index value of 50 represents no change. Lower is a contraction. Today's data is the lowest reading since October 2017, and the expansion that there is being driven by higher prices rather than rising demand. In China, and in a direct move to prop up its debt-fueled investment sectors, they have scrapped credit limits on banks lending to local governments. This reverses a national decision that such excessive lending was toxic to their financial stability, which just goes to show how seriously authorities there regard the recent slippage in their economy. Their debt binge will now get larger. Indonesia said it will soon raise taxes on imports of more than 1,000 mostly consumer goods and ban purchases of big foreign luxury cars in its latest move to defend its currency, which hit a new low yesterday. US Treasury 10-year yield is holding at 2.9%, and their two-turn curve is a little wider at 25 basis points. The Aussie government 10-year is at 2.55%, that's up 3 basis points. The Chinese government 10-year is at 3.64%, up 1 basis point, while the New Zealand government 10-year is at 2.58%, up 4 basis points. Gold has recovered $4 an ounce after yesterday's drop. It is now at $1,196 an ounce. US oil prices are down more than $1 today, now just under $69 a barrel. The Brent benchmark is just over $77 a barrel. And the Kiwi dollar is firmer today at 65.9 US cents. On the cross rates were higher too, at 91.7 Aussie cents and 56.7 Euro cents. That puts the TWI at 69.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.